All right. Hey, good morning, traders, and welcome to followmetrades.com. And this morning's webinar, My Secrets to Trading Success. I'm Dean Jenkins, founder of followmetrades.com. And I'm glad to have you join me here on this Saturday morning. Really appreciate you taking the time, and I'm going to do my best to make it valuable for you. Make sure you can locate the chat box in the Zoom webinar platform here, because I definitely want to make it interactive, want to answer your questions as we go along. And later in the presentation, I'm going to offer to analyze any stock symbols that you're interested in. So you'll definitely want to locate that. So go ahead, find the chat box and type in where you're calling in from, what city, state, country. It's always fun just to make sure you can find that and use that feature. And, you know, it's always interesting. We typically get people from all over the world here. So I'll give you just a moment. Joy's calling in from California. All right. Well, just to the south, I'm in Washington State, Olympia, just about an hour south of Seattle. And Brock up north of me there, Vancouver, BC. Well, good morning to you, Brock. All right. So while you're typing that in, a little talk about what we're going to do here, the overriding thing, right? And Mike's calling in from Montreal. All right. So we got some Canadians in here. Glad to have you. I have several customers up in Canada. All right. So the title of this webinar is My Secrets to Trading Success. But the real secret is there's no secret, right? There's no backroom handshake, kind of a hidden dark pool thing over here, or just, some magic feather key that if I just learn this one little thing or find this little indicator, I can unlock, easy riches in the market. None of that exists. The key to successful trading, the secret to successful trading is keeping it simple, using risk control, and being objective, right? We're going to experience emotion in our trading, but to the degree we can limit its impact on our decisions and our actions, the better success we're going to have. So there's no magic key to unlock, easy profit in the market, but there is profit to be made in the market. And here's what's true is that consistent, respectable profits in the market are definitely possible. And what's not true is that it's easy or you're going to get really, really rich really, really quick, right? You do hear stories about people who, take a big trade, make a bet, right? It's gambling, and they make a bunch of money on one trade. That can happen, but it really is gambling. And if you're going to bet the farm, you have to be willing to lose the farm, and I'm not willing to. So I don't gamble, I trade, and I have probability and statistics on my side in my trading. I'm going to be showing some actual charts and trades and some trades that I like, some trades that I'm in. So it's important, just to get this up front. I'm a trader. I'm not a financial advisor. I'm not giving financial advice. All trading and investing involves risk, and risk control should be used at all times. And I'm going to offer an overview of how I do that. So I think some of you on the call, maybe haven't been on a webinar with me before. So I'll just introduce myself. Hi, I'm Dean Jenkins, founder of followmetrades.com. And I will turn my camera on for just a moment there. So I'll turn it off, if we get into the presentation, because I don't want to be a distraction. But good morning. I'm Dean Jenkins. I'm the founder of followmetrades.com. I've been trading and investing for about 25 years. Really started when I went to work for Intel Corporation in 1993, and they gave us incentive stock options and employee stock purchase. And wow, I joined in 93, and it's doubled and split like clockwork for about a decade. And pretty soon that stock was worth some money, right? On that journey, I got an MBA from the University of Washington, and I started off as a fundamental trader, using my MBA and analyzing companies and balance sheets and ratios and all that stuff. I got mixed results. It was kind of frustrating, actually. I totally gave up on the market. I was just lucky in 2007. I go, this is just too frustrating. I pulled my money out into cash. And then of course the market crashed. So that was totally lucky, but I couldn't stay away. I got back in after the crash. I was in some winning trades. Like I bought Bank of America at $7. It went to $12, but I was stressed out because I didn't have a trading plan. I didn't really know what to do. And if you don't have a plan, even a winning trade can be stressful because you're going, man, I don't want to miss on future profits, but I don't want to give away what I got. What do I do? I got interested in technical trading in about 2010. I made a lot of mistakes. I went to some webinars and some people talked about, oh, this indicator is going to unlock riches for you. And what I, found out was that wasn't true. There's no magic feather here. Right, about 2012, I finally settled on the current trading system that I'm using now, started getting consistent profits. And the key to that is risk management. There's lots of trading systems and trade setups, but risk management is the key to any trading system. 2015, I launched followmetrades.com, this service, and started offering coaching, mentoring, and stock pick to subscribers. And here we are 6 years later, and it's been a success, and I'm just having a ball. Best job I ever had. So that's me, that's my story, and I'll turn the camera off here. But nice to meet you, and thanks for showing up. And for those who showed up right after the start here, go ahead, find that chat box in the Zoom platform, and feel free to type in comments and ask questions as we go. Definitely want it to be interactive. So I run this trading service. It's called followmetrades.com, and I publish my results. I believe in complete transparency. All right, so these are, the performance we've been having over the last several years. We're on track here, pretty good year. The last trades we closed were earlier this month, and so at that point we were better than double the indexes, and we've closed a couple more. I need to update this, but we're on pace to have a typical year, 25% for the year or better. And those are real results, right? I just believe in being transparent, being straightforward. So this is my website, followmetrades.com. Here's that same graph, right, for the results. And, I offer transparency. You can come click on this and you can see every trade that's included in that number, right? Winners, losers, right? Everything's there for every single year listed. And we have a third-party CPA firm audit my results, right? And you can go see the audit results here. So I send my brokerage statements to a CPA firm, and they audit the results. So what I say I'm doing, I'm really doing, and I just think that's important. All right, why, if you're going to make these claims, why wouldn't you back them up? All right, here's what we're going to do. And again, feel free to ask questions, make it interactive. But I'm going to explain my trading system, and I try to keep it really simple. I'm going to walk through how I analyze a chart. I'm going to share some trade candidates a couple that I just took yesterday and published to my subscribers, and then some that I'm watching. Be happy to look at a couple symbols if you guys are interested in them when we get to that point. Who knows? I may love some of your ideas. I often get trade ideas just like that in a webinar setting like this. And then I'll extend an offer if you want to follow along with my trades on an ongoing basis. So stay with me if you want to get the most out of it. If you're multitasking, you probably missed something. I am recording this, and then, as long as the technology works, in a couple hours, I'll get a recording out to everybody that registered. All right. So success. I like history. I like quotes. I like reading what smart people had to say. So here's one from Benjamin Disraeli, and said, "The secret to success is to be ready for your opportunity when it comes." And I love that. And a lot of my trading, when I sit down and start looking for trades and doing some scanning, I don't expect to find one right away. But I have a plan, and I develop a watch list, and then I wait and see if it qualifies. And I'll show you a couple on my watch list now. And then Louis Pasteur, in the field of observation, chance favors the prepared mind. You got to have a plan. You got to know what you're looking for. You got to train yourself, right, in whatever discipline you are participating in, right? So just a quick note here, trading and investing are different things, right? Investing is typically buy and hold long-term. It typically includes some fundamental analysis, includes diversification, asset allocation, yield, growth. Sometimes I'll be looking at a chart and I go, yeah, I don't really like this setup. And somebody will go, well, it has a really big dividend. Okay, that may be true, right? That's more of an investing long-term factor, right? Trading is typically shorter term. We're looking for market swings using technical analysis, and we can profit from a move either up or down. And I do both. I trade long and short. And sometimes when the market's going down, the old saying is the market takes the escalator up or takes the stairs up, and it takes the elevator down. So when it's dropping, it can drop fast, and there can be some real profits to be made. All right. So here's what I've learned in 25 years of trading and investing, and really now in 10 plus years in technical trading. is, you know, to be a consistently profitable trader, you need a plan, right? And I think these are essential elements to any great plan. You got to have high probability trade setups. You got to have a good reward to risk ratio on your trades. I'll get into that a little bit more. You got to use risk management. You got to control. Some trades are going to lose, right? We can't win 100% of the time. So if a trade loses, we got to control that loss, make it an acceptable level, one that is not going to be a setback. And then once you're in a trade, you got to have a predetermined script to manage it, because you're gonna, you know, you're gonna experience emotion. You can't avoid that, right? If the trade's going up, you're like, yeah, wow, this is, yeah, go. And if it's going down, ooh, right? You're gonna experience emotion. So you got to have a predetermined game plan about how you're going to manage a trade that's been proven. So those are essential to any trading plan. Okay, so here's the tools I use. And again, I keep it simple. And there's no magic in trading. There's no, you know, hidden secret. There's no, you know, oh, this is the indicator that will unlock riches. That just doesn't exist. And despite the number of people on the internet making that claim and willing to sell it to you, it doesn't exist. Here's the tools I use, right? I use Dow theory. It's over 100 years old. Charles Dow came up with this in the late 1890s. It was a series of observations about price action and how the markets work. Still valuable today. So I use Dow theory for trend analysis. I use Ichimoku cloud to help confirm a trend, and once we're in a trend, to identify potential support and resistance areas. And I use a very simple version of Elliott Wave, looking for impulsive or corrective waves. Okay, so I bring all that together and I'm looking for a high probability outcome. Right? I look at a chart and, you know, I want to know that I have an edge, that there's a high probability that the chart is going to go up or down. Right? And then in a trade, I look for a high reward to risk ratio. And what that means is, you know, I've determined, you know, what the max amount I'm willing to lose is. And I take a little different approach than some traders on, you know, the exit point on a trade. And I'll show you on a chart. Okay. But, you know, there's a chance we're going to lose. Every trade has the potential to lose money. So I control that loss. And, you know, say the loss that I'm willing to accept is $500. That means that when I'm looking at the trade, it has to have the potential to make, you know, 1,000 or more. You know, I look for a 2-to-1 or better reward to risk ratio in most cases. And I maintain that as a statistic in my trading. It's called the payout ratio, that my winners on average are double than my losers. And that's good math, right? That's simple math that all traders need to know. If you maintain a payout ratio of 2-to-1 or better, meaning your average winner is double the size of your average loser, you only need to win 50% of your trades and you'll be a profitable trader. And if you can win more than 50%, you're gonna be more profitable. It really takes the pressure off, right? That means you don't have to stress over an individual trade because you're trading a system and you're following these guidelines and you got statistics on your side. So there's a secret for you. It's not magic, it's just math. I said I use Dow theory. So here's a simple version of Dow theory. So Charles Dow, smart guy, founded the Wall Street Journal and the Dow Jones Company. He said, hey, you know, an uptrend is defined by a series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Well, that's really important because, like I said, you can be in a winning trade in profit, and then you start getting a little anxious, right? And you go, well, what if it, you know, I don't want to give my profit back, right? How do I know when this trend is over? How do I know when to get out? Right? And the same thing in a short trade, you know, a downtrend is lower lows, lower highs, lower lows, lower highs, right? Price does not move in a straight line. It kind of stair steps like this, going up or down, right? And kind of the cool thing in this theory is you can know when the trend has begun when you get, you know, maybe out of a channeling market, you get a high, higher low, new high. That signals the beginning of an uptrend. And then you're in the uptrend and you're, wow, this is cool. It's going up, right? And goes up, yeah, oh, here we go, yeah, right? And you can kind of have an emotional roller coaster, but you know the trend is over when it doesn't put in any more highs and then it takes out the prior lows, right? That's the end of an uptrend. So it's, you know, it's a rule-based observation. And what I do is I establish my stops, the point that I'm going to exit the trade at these higher lows in an uptrend. I put a stop here, and then when a new one's in, I move it to here, and then I move it to here, and then I move it to here, and eventually the trade closes. Now, I can't call the exact top, but it gives me a stress-free and very objective way to manage a trade in a trend. I think it's cool stuff, right? Downtrend, same way. It's, you know, a downtrend begins with a low, lower, high, new low. Trend continues with lower lows, lower highs, lower lows, lower highs. Trend is over when it no longer puts in lows and takes out prior highs. Bingo, right? How cool is that? Keep it simple, right? And we just observe that price action on charts. So I said I use Ichimoku cloud. The cloud is this shaded area. This was developed by Goichi Hisada in the 1930s. He was a Japanese journalist, and he did quite a bit of research. It took him 40 years, and he finally published his system and his method in a book in 1969. Ichimoku cloud is really just a series of moving averages. It's a different way to look at moving averages than your typical simple moving average or exponential moving average. And they use three values, right? There's a fast line, which is this yellow one. There's a purple line, which is slower. And then there's this cloud, which is even slower yet. And the cloud gives you a region. And you know, the way you interpret it is when price breaks above the cloud, that can indicate, you know, when it wasn't, or it's, you know, kind of channeling. When it breaks above a cloud, that can indicate, you know, a trend and help confirm a trend. And I'm using it with Dow theory. So I see a high, higher low, new high as it breaks out of the cloud. Now I got two indicators, two separate studies, you know, or techniques confirming the beginning of a trend. And Casey saying, am I using Dow theory for overall market trend? There's a lot more to Dow theory than what I just showed for that trend analysis, right? Charles Dow got into, you know, sector rotation and all kinds of, you know, really interesting stuff that's still valid. But in terms of trend analysis, I'm just using that small portion that I described of trend analysis, trend definitions. So thanks for the question, Casey. All right, so Ichimoku cloud, it can confirm a trend beginning. And then it's also really helpful, once we're in this trend, it can predict, right, with this cloud, what the support areas are going to be, because, you know, a trend's going to go higher highs, higher lows. And, you know, you know, this is a green cloud, so it says, hey, this is a bullish trend, an uptrend, right? And the thicker the cloud is, this distance, this vertical distance, the stronger the support it's going to provide. So you can look at this cloud and go, well, we're in an uptrend, it's pulling back, but, you know, there's a really high likelihood it's going to find support at the cloud. You can see quite often it does. So that's really helpful when we're managing the trade. So that's Ichimoku cloud. And then the last thing I use is Elliott Wave. And, you know, you may be rolling your eyes because a lot of people have heard of Elliott Wave. And there are, I think people have taken the original theory that Ralph Nelson Elliott developed back in the 1930s, interestingly, at the same time that Goichi Hisada was working on Ichimoku cloud. And they've overly, you know, they've read too much into it. They've made it too complex, right? You can look at some Elliott Wave chart systems, right? And it's just an overwhelming number of, you know, of permutations and grand cycle this and minutia cycle that and ABC 1, 2, 3, way too complex, not repeatable, highly subjective, right? Ralph Nelson Elliott, you know, his main observation was, he goes, hey, markets seem to move in sequences. And his theory was, it's, you know, it has to do with collective investor psychology, crowd psychology, right? News breaks on a new stock, right? And everybody jumps in and there's this impulsive move. And then at some point, right, there's a shift in crowd psychology and there's some profit taking and there's a correction. And then it comes back into this next impulsive moves. We call this wave 5. So 1 and 2 are really the beginning of the trend. Wave 3 is the big deal. Wave 4 is a correction. Wave 5 is follow through, right? Extension. And then there's a complex correction afterwards. So I'm looking to trade wave 3, 4, and 5. Now you know, wave 4 is a correction and it can be tricky. You really have to make sure that, you know, it's working out, that all the metrics are being met and that it's got good profit potential. My favorite trade is 5, wave 5 trade, because, you know, and here's the thing too that frustrates people. They'll pull up a chart, right? Now, you know, just kind of burn this shape into your mind for a minute, right? There's a very clear pattern right here of this wave 1, 2, 3, 4, 5. So memorize that chart, that pattern. Now let me pull up the chart, the real chart. And I told you I worked for Intel, and yeah, I'm a fan. Intel's a great company, but I'm not a fan of their chart. And if you look at it, and I'll pull off some of the analysis I've done, clean it up a little bit here. Right, so here's a chart for Intel. Here's the Elliott wave pattern, right? We're looking for a clear, strong, orderly wave up, a correction, and a new wave. Well, it's not here, right? Intel's chart currently is chaos, right? I can't come apply Elliott wave techniques. I can't use a pattern that doesn't exist, right? And Intel's chaotic right now because they got a new CEO and a new strategy and earnings this, right? It's a chaotic chart, right? Elliott wave's not going to work. So we have to recognize that. What we're doing is looking to see if the pattern exists, and if it does, then we can use it to our advantage. And if portions of the pattern 1, 2, 3, and 4 exist, then 5, if it's following the pattern before, there's a pretty high probability it will continue to follow it, right? No guarantee, there's no free lunch on Wall Street, but it's probable, right? There's a high probability that it will continue that pattern. So I can use that to my advantage. And so can you. So that's what I'm looking for. And I'll show you how we apply that to a chart here, okay? So risk management, this, whether I'm using, I told you Dow theory, Ichimoku cloud, Elliott wave, maybe you use something else in your trade setups. You like RSI or MACD or, whatever, right? Doesn't matter. As long as you've tested that and it works, right? But risk management is important no matter what indicators or setups you're using, right? You have to determine how much you're willing to lose on a trade. It's got to be an acceptable level. I call it a pain-free level that will not be a setback in your trading, right? You can continue to trade. It won't blow your account up. I use 2%. That's a statistically proven number from the theory of risk management, what they call the risk of ruin, all right? As long as my trading statistics, if I have a 60 or 65% win ratio and a 2-to-1 payout ratio, 2% is a totally acceptable number, right? And if I have a 65% win ratio, that means 35% of my trades are going to lose, but I can still be very profitable, right? As long as I maintain risk control, right? And so stop price level for me is determined by price movement, Dow theory, before calculating the trade position size. And the math on this, the arithmetic on this is pretty simple, right? If I got a $100,000 account, right, then 2% of that is $2,000. So I take my stop minus my entry, tells me the risk or the loss per share from trading shares. I divide that into 2,000 and it gives me how many shares I should trade. That means, if I do that math and it's, it's $1 a share that I'll lose if I hit the stop, then I trade 2,000 shares, right? That way, if I go hit the stop, exit the trade, I'll lose $2,000. That's the max I'm willing to lose on a trade. And then I also have a limit. I never put more than 15% of my account into any given trade. So I use that as a constraint as well. So what that looks like on a chart, and let me pull up a real trade that I'm in right now. Okay, I'm long Procter & Gamble, just went in Friday. And so this blue line, this light blue cyan colored line is where I took my entry early Friday, right? Pretty nice, it's up since then. This red line is my stop. That is, if it hits this price, I'm gonna exit the trade. And this green line is my target. And that's a conservative target because that's the wave 3 high. It may go much higher because this is a wave 3 trade. But let's focus on this risk or this stop. My stop, you can see here's Dow theory, right? We got a high, higher low, high, higher low, high. I'm placing my stop at this low, right? Which is a support level, right? And now if this trade hopefully continues up, and it's not going to go straight up, right? It's going to do this. Hopefully well beyond my target. That'd be awesome, right? When this happens, I'm going to take my stop and I'm going to move it from here to here. And then I'm going to move it to here. And then I'm going to move it to here. I'm going to place my stop according to support levels that are created by price action. So some people, bless them, will say, they'll say, okay, I'm going to put a fixed amount of money into a trade say $5,000. I'm gonna go put $5,000 into a trade. And then if it goes down 500 bucks, I'm going to close it. I'm not going to lose more than 500 bucks. I'm going to close, if it goes down 500, I'll close the trade. Well, I think that's arbitrary. Using a fixed amount of capital into a trade and then a fixed exit, loss price. I think that's arbitrary. And the reason I think it is because price doesn't move in a straight line. A trend, right, has this kind of channel, this normal variation that it moves in. You can see here on this Procter & Gamble, right? It moves in this uptrend within a range, right? It doesn't go straight up. So this arbitrary, call it 500 bucks. I'm going to put $5,000 into the trade. If it goes down 500 bucks, I'm going to close it. That could be well within this range. And the saddest thing of all in trading that could happen would be you were absolutely right about your prediction about this thing going up, and you closed the trade for a loss. You lost money. So you were right and you lost money. That's no fun, right? So what I do, if say $500 is the max I'm willing to lose on a trade, and establishing a max loss is totally legitimate. You have to, right? So what I do is, so my entry on this trade was at 133.79, and I said the stop price was at 127.03, because the reason I put my stop at the support level is if price goes down below that, then the thesis that we're in an uptrend has been disproven, right? We're looking at higher lows, higher lows. If it takes out my higher low, the uptrend has failed. That's the point. I want to exit the trade. So I determine where the stop should be. Here's my entry. And then I go, okay, if this is my entry and this is my stop, I simply subtract the stop price from the entry price. It gives me a risk dollar amount per share. And I divide that into, if 500 bucks is my deal, right? This is about $5, right? So $5 per share, I would divide that into 500. It would give me 100 shares. That's my trade size, okay? Which is based on the actual price action and how this thing's moving. Different than the arbitrary capital and loss percent. You guys, that makes sense? You guys follow me on that? I think so. You guys are smart. That's just simple math, but it's a different approach than a lot of people take. And I think this is better. That's why I'm doing it. Okay, so that's my deal with stop management. And you can do the same thing if you're trading options, right? Like I got this Procter & Gamble long. I like it. And I'm trading it with an option, right? I go buy a call option, but the same thing applies. It's, I got a whole method for how I pick which contract I'm going to trade with, right? I always go in the money, right? I'm looking 60 to 90 days out on the contract expiration. And there's good reasons for that. But I'm going, same deal. How much on that option will I lose if this hits the stop? And everything's driven off of the underlying chart. Even though I'm going to trade it with a call option, my exit will be determined by the underlying chart. And if this goes down and hits here, how much will I lose on the option, right? That's how I determine how many contracts to buy, right? Still fixated here on the underlying chart. So let me show you a quick and dirty here on Elliott Wave, right? And this is what's so powerful about it. So this is wave 3, right? And you don't need to really obsess about all these weird permutations that some people do, right? When we look at a chart, we just go, is there a big impulsive move on on this thing? I go, wow, yeah, I think so. Went from $100 to $145. That's a pretty big move, right? For a Procter & Gamble, a shampoo company, right? They make other stuff too, right? That's a big move. So that's got my attention, and it's reasonably orderly, right? It wasn't like Antil where it's all gappy and all kinds of gyrations going on. Wow, there's a pretty orderly move. And now I just use the tools that I've learned with Elliott Wave. I look at this, this chart that I showed you. Where is it? Here, a couple slides back. I'm looking for this basic shape, right? And let's see if it's there. So here's a 1, 2, 3, 4. That looks kind of like it, doesn't it? Kind of like the shape. And now it looks like wave 5 is starting. How awesome is that? And what do I have? I've got Dow theory. I've got higher high, higher low. It's really taken off. And well, look at that. It went above the Ichimoku cloud. And I also use this price oscillator, and this just went positive. Wow. I've got 3 studies telling me that an uptrend is beginning. I've got Ichimoku cloud, Dow theory, 4 studies, price oscillator, and Elliott Wave says, hey, we should be getting to wave 5. So there's no magic in that, right? That's a relatively simple trading system using a couple indicators in conjunction to build confidence in a trade. How high could this go? Well, we just use Fibonacci numbers according to Elliott Wave rules, and we come up with a Fibonacci extension, and we go from here to here to here, and this gives me a wave 5 target zone clear up in here. So as I take this trade, I've got a green line established as my initial target at the prior high, because it could fail here. It did before, right? But this could go higher. So I look at this and I go, what's my risk to reward? My risk is the distance from my entry to my stop. It's this distance. And my reward is the distance from, so I'll just draw this, right? This is my risk. This is my reward. And my reward could go higher, right? So that initial one is a conservative one. Now this is already about 2 times this, really close to 2x this. So it's got my 2 to 1 plus it could go even higher, right? So this is great. I like this trade. That's why I took it. Right? I took this on Friday and I published it to my subscribers, and we're in profit. That's really nice. So that's my trading system. That's my secret, right? Keep it simple. Use risk management, right? Get probability on your side. Okay, back to the file. Any questions or any comments you guys got for? I'll show you something really cool here. It'll blow your mind. I like math. I like statistics. I like Excel. Let me show you something. So this is an Excel spreadsheet that I developed, and it is doing what's called a Monte Carlo simulation. And so what I do is sample. I can model a trading system here, and I got it set to use 50 trades. So if you're trading daily charts like I am, right? 50 trades, that's a lot of work, right? That's a lot of trades. I do about 100 a year on average. All right, so I can put in the trading system statistics here, and then I can go sample 50 trades. And what's happening down below here, I'm using the random number generator functions in Excel. And I say if I got a 50% win ratio, then each trade is gonna have a 50 or a 65. Let's make this 65, okay? 65% chance of winning. But there's normal variation in any system and in the market. So it has a 65% chance of winning, but it may vary from that during the sample. And then I go, what's the max win and the max loss? So I've got this set at 2 to 1, right? Max win 2,000, max loss 1,000. Now, if you're taking lousy trades, I call lousy, right? Small win potential, right? Or you're making the grievous mistake of jumping out of trades early. If I were to, I could look at this PG trade, right? And, I took this trade pretty early Friday in the session. It popped up nice. The option contract is in, $300 profit right now. I could get excited and go, okay, take the win, man. Close the trade. That'd be a big mistake because I need big winners. I need them to be multiples of my losers. And so if I just start taking small winners, I'm going to really undermine my system. And you can see here, so even if I'm doing this and I take small winners and they're about equal to my losers, even at a 65% win ratio, every time I cycle the sheet, this shows you what the P&L would be over 50 trades. So what you're going to notice, watch this cell. This is the P&L over the So there's 5,000, there's 2,000, there's 2, 3, 13. What you're going to see is it's very erratic, right? It's not a very predictable system. And if we cycle it enough times, just given normal variability, you probably end up with a loss, right? 65% win ratio, 1-to-1, right? 50 trades is a lot of work, right? And occasionally we're hitting it big, but sometimes we're not doing very well at all. There we go. Look at that, 50 trades, 1-to-1, 65% win ratio. We lost money. Dang it, right? That's just statistics, man. So what if we just increase this one thing and say my average winner is double my average loser? And I can control this. I can absolutely control this 2 ways. 2 things I got to do. Only take trades that have, you know, a legitimate target that is bigger than the stop. This one does. And stay in the trade and let it run. If I do those 2 things, I can achieve this 2-to-1 ratio. And look at these results, how much better they get. Same win ratio, right? There's still variability, but these are bigger numbers, you may notice, right? And this will never go negative. Woohoo. Now, what if you're trading credit spreads? A lot of people like credit spreads. There's a lot of webinars pushing credit spreads. As you know, smart people sell premium, and there's 2 ways to win and 1 way to lose. And I've seen that pushed so much. I just must be missing something. I must not get it, right? So I spent a lot of time researching credit spreads. And if you go onto any brokerage's website, or you go to Investopedia or all these education sources and look up the definition of a credit spread, they're gonna all give you the same P&L graph, and it's a total bummer P&L graph. In fact, we're a little ahead of schedule. I'll do it. You're not trusting me. Let's go to Google. Credit spread P&L. There we go. Credit spread profit loss. There, Investopedia comes up the first one. There should be a chart if we get here pretty quick. All right, here's my P&L. I could make 700 if I win, and if I lose, I'm going to lose 1,000. What is that? About 1,200? Huh? That's not a perfect P&L chart. Let me see if there's a better one. Schwab. There it is. Okay, here's my potential profits, 1,500. My potential loss is 3,500. Is anybody depressed yet? Let's use these numbers. I didn't make this up. Charles Schwab is a world-class company, smart people, right? 1,500 potential win, 3,500 potential loss. How good does my win ratio have to be to make money with that system? Let's go 75%. Okay. I made money on that one. Made good money on that one. So my win ratio is saving me here, but you can see that's pretty low. And I'll bet you at some point this is going to go negative. Anybody trading credit spreads? Look at that. 50 trades, I got a 75% win ratio, and I lost 10 grand. Anybody trading credit spreads and go, aha, I see the problem. All right. Back to my agenda. I hope you enjoyed my Excel show. All right, where are we at in the slides? Risk management. It's important. Having a good risk to reward ratio is super critical. Oh, trade management. So you can get into a trade and you know, great setup. You use risk management and you can still lose money if you don't manage it correctly. And great trade management means taking profit at the right times. You can add to the position strategically, and that is not doubling down, right? You got to stay with the winner as long as possible. I talked about that, showed that in the Monte Carlo simulation. You got to exit the trader at the right time. So again, I use Dow theory, right? I put my stop, you know, here's a wave 5 trade. I put my stop at these support levels and I trail it up as price action plays out and new support areas are defined. And then I take partial profit in thirds. So once I go through a key Fibonacci level, I'll take a third of it in profit. And that way I'm achieving some balance where I lock down some profit, I reduce risk, but I have some capital and I stay with the trade so it can be develop and become, you know, as big as possible and hit my target. And I don't exit at the target. The target is there to determine whether there's sufficient reward potential in the trade. I'm not going to exit. You know, if I'm in this PG trade I showed you, right? If it goes up to $145, I'm not going to exit just because it hits that. If it's going to blow through that and go up into the, you know, the wave 5 target or beyond, I'll stay with it for as long as it wants to run. So let it be as big as possible, right? So here's the overriding concepts in trading success. Here's the secret. Keep it simple, you know, a system that makes sense to you, that's based on reality. You got to control risk. You got to be objective, right? You got to have a trading plan. You got to follow it. So I showed you a live chart on Procter & Gamble that I'm long on. Here is here's a trade that I'm watching. I said earlier, if you were here, that you know, when I sit down and start scanning the market and looking for trades, I don't really expect to find a trade right now that I can pull the trigger on. I typically am finding trades that are almost ready and they just need some final qualification, and then I'll put them on a list. I'll watch them and I'll get an alert if the thing's qualified. Yeah, and this is a price oscillator. It's called a price oscillator. This is one from Trader's Coach. It's got this special pink dot here. So Eric is asking about the price oscillator, right? Here's one that is exactly the same in terms of amplitude and direction. It's just the standard free price oscillator that is included with any trading platform. And the settings on that are, so I'll show you this. Price is low, fast length 5, slow length 35, color length 14. And then the important thing is switching from a line to a histogram. And then I change my up and down colors to green and red from the factory because they're typically chartreuse or some strange color that doesn't make sense. So that's it. And you can get this price oscillator, Thinkorswim, TradeStation, Ninja, whatever you're using. Yeah, you're welcome, Eric. Happy to help. All right. So here's a trade that I'm watching. So Friday I was scanning, and you know, I have 4 or 5 techniques that I use to go scan the market, look for trades. But you know, it all always starts with what I call a thesis. It's like I think this market sector may have some trade setups. Okay, and Joy, I guess I'm answering your question right now. Right. Again, I use a variety of things, but it always comes down to a guess, a thesis, right? Because you know what's going on in the market, what's going on in the news, right? You know, what are some recent headlines, right? Oil prices were up, now they're down. Okay, oil companies. I should go look at some oil companies, right? You know, there's a big ship stuck in the Suez Canal. Who's impacted by that? Right? Every shipping company in the world, pretty much, right? There's a big chip shortage, right? That can't get built because everybody's short on chips, right? Interest rates are rising. You know, these are just big ticket items in the news. Stimulus checks came out. You know, Okay, if consumers go spend that money, what are they going to spend it on? Who's going to benefit, right? You come up with ideas, and then you go look at that sector, and I'm not going to trade based on that news. I'm going to go then draw my attention to a particular sector, group of stocks, and then I'm going to apply my tools and see if that thesis about maybe this is happening is true or not. So I acted on this this idea, hey, the big chip shortage, right? And maybe there's a backlog, and now there's going to be more. Maybe chips are going to recover, right? So first thing, I can go look at the ETF, right? SMH, big semiconductor ETF. And what I can see, oh wow, look, semis were doing great. They had a little correction, and now look, oh, higher low, new high. So SMH might be a tradable instrument, but I would sure like to see this develop, right? Low, lower high. I really want to see it high, higher low. I want to see a new high. I want to see it break above here. So I could just set myself an alert here at about 240, 292. And if this happens, SMH could be a play. And SMH is an ETF. It's got a bunch of semiconductor stocks. I go, well, maybe I just Googled it. Said, what stocks are in SMH? Right, that's on the web. It's easy. And oh, look, TSM, NVIDIA, Broadcom, Texas Instruments. Right, there's 24 stocks. Well, I can look at 24 charts in about 5 or 10 minutes, and I did. And I go, which one of these is the best? Turns out, Qualcomm. Best in terms of the price pattern. I like it. This is a really super orderly Elliott Wave presentation, right? I got a 1, 2, 3. We got a nice 4. Now I'm waiting on 5. I want to see a high, higher low, new high. So I have this one on my watch list. And if we break this line, I'm probably going to be going long. I also am watching this this oscillator. Hadn't turned green yet. I'd like that to turn green. And you can see we're not quite through the Ichimoku cloud. So, but this will narrow. The cloud will narrow if price goes sideways a little bit. And then, if we start getting this to break above here and this to go green, there could be a good trade on Qualcomm. So I'm watching. It's on my watch list. It's not quite ready to go yet, but that's a good one. And gee, what's the target? If it were to really, so I got time. I don't have to rush this trade, because if it's really going to happen, there's my target zone, up around 200 bucks. Currently trading at 130. There we go. All right. So at this point, I'd be happy to take a look at any stock. I'm primarily a stock option guy. If there's a stock or an ETF that you're interested in, type it into the chat box, and I will bring it up, and I will offer my thoughts on it. I might like it, I might not. Of course, Apple. Can't do a webinar without looking at Apple. So what do we got going here on Apple, right? So we had this big move up, wave 3. We had a correction. We had a shallow 5. It didn't really make it to the target zone, did it? And now we got really clear low, lower high, low, lower high. This is what's called a complex correction after 5 wave. These are hard to trade. So for me, I'm just not interested in Apple. And you can see it's just channeling. It's not really doing anything. And this heavy line is the 200-day simple moving average. It's really finding support there. It's just not much price action on that. Rich would like to look at Ford, symbol F. All right. This is a very orderly chart, right? But you should look at it and go, wow, that's a big, nice move, right? From $4 to over 13. Yeah, that would have been nice to own Ford, right? Really clear, like, wave 1, 2, 3. But now we're starting. Look at the momentum in the oscillator. You can see it's going down. So even though the uptrend is still down, we have what's called bearish divergence, right? The momentum is coming out We got a pretty strong low. So I would not go long on Ford here, right? And I would be watching for a correction. Doesn't mean there's anything wrong with Ford. That's just normal, healthy market cycle stuff, right? If Ford were to do something like this, we got, pretty much, we got a little thing going on here. If it were to do something like this, I'd be interested in a short, and I would see what price that would be at, and we got a target somewhere in here. But it's not there yet. Okay. So there's really no trade for me, but I will be watching for a potential short on Ford. And Casey says AMD or NVIDIA, big chip graphics card shortage due to the crypto miners. Yeah, let's look at AMD. They were on that list I looked at, and wasn't that exciting? I liked the Qualcomm better. It's still in a downtrend, right? Low, lower, high, low, lower, high, low, lower, high, low, below the Elliott Wave, or below the Ichimoku cloud, negative momentum. And maybe it's finding some support. I wouldn't get interested in AMD until it can reverse this thing with a high, higher, low, new high at this price level. Then we could come check it out. But for now, no. NVIDIA. Looks a little better than an AMD. Same thing, all of them, just like the SMH chart. We're waiting for them to prove that this uptrend is gonna take off. Mike, VLDR. Well, that's a pretty choppy chart. I don't think I know this company. Velodyne Lidar. Yeah. Look at the what happens, what's going on here, right? This thing has huge moves and then nearly 100% retracements. Huge move, more than 100% retracement. Huge move, more than 100%. So if you like, excitement, is this going to do it again? Maybe. You do have you got a high and then a higher low. So it took out this low. So what you want to, before you do this, just like it has done before, right? It's pretty cool how this stuff always works, right? High, higher, low, new high. Oh, get in there. High, higher, low, new high. Oh, it's a rocky ride, right? So you want to see that happen. And in fact, now that I study it closer, I was wrong. So this is, give me a line, right? So we do have a high and a higher low. I would wait for a new high. That's just the patience and discipline. I would not try to jump it, right? I would give up a few points of entry to increase the probability of the trade. So I'd look for an entry here. Who knows? It could do another rocket ship thing here. But it's a very volatile stock, so you got to keep that in mind. So cool. All right, Mike. Thanks for bringing that one up. It was fun. Neela would like to look at Tesla. Can't do a webinar without looking at Tesla. And I'm a technical trader. I look at charts. But I want to know what company I'm trading. I want to know a little bit just what's driving it, right? I don't go do all this fundamental analysis and ratios and all that stuff. But I kind of want to know what's going on, who they are, what sector they're in, right? Is there any big news breaking? And Tesla, right? For one thing, it's expensive, right? I like to trade options, and so a $600 stock, the options, calls or puts, they're going to be thousands of dollars. I'd rather trade something it's $100, $200, $50 stock, where I can trade multiple option contracts and have more flexibility. So I kind of avoid the Tesla and the Google and the Amazon just because of the price. And then Tesla, it's clearly in a downtrend, right? It started here, low, lower, high, low, lower, high. It's heading lower. It's in this correction zone, so it's dangerous to try and short it here because it's already corrected into this expected Fibonacci retracement zone. It's already made it, and there's no signal to go high yet because it has not made a high, higher, low, new high. So there's really no trade on Tesla, and it's expensive, so I don't really like trading it. And I also know, Tesla is a company, it's a car, and it's a religion, right? some people who trade Tesla, for some of them, it is a religion. And, you know, and so's Apple, right? And I just try to, you know, I just try to avoid stuff like that where there's distortion happening in the market. Casey says, how long do I wait for a higher low or lower low to confirm on a daily chart? It's not really a matter of how long, it's just how clear is the price action, right? Eric says, Neil, I'll do this last one for Eric, and then got to start winding it down. All right, Neo. This is the Chinese Tesla, right? So Neo is obviously, you know, had a big run. It's corrected right in, look at this, right into the Fibonacci retracement zone, these blue lines, 38.2 to 61.8. Perfect. So you wouldn't want to short it here. And look how it found support right around the 200-day moving average. So the next move on Neo would be up, but it's not ready, right? Because it's still in a downtrend. It hasn't proven a trend change yet with a higher high, higher low, higher high, and the oscillator turning green. Those are the things, and getting above the Ichimoku cloud. Now, if this is the end of the correction and it's going to head up, you got plenty of time. You do not have to rush it, because the target on this is going to be big. The target zone using Fibonacci extensions is going to be have a midpoint of about 80 bucks. So you have time to let this develop and prove itself, and then you take your long when it does. All right. Hey, thanks for that one, Eric, and everybody else. So let me go ahead and wrap up here. I got a quick offer for you, right? So, hey, finding great trade. I talked about scanning, right? It's hard, right? I spend quite a bit of time and effort, right? It can be like finding a needle in a haystack. I showed you a couple of good ones today, I think. You know, the PG that we took, looking at Qualcomm coming up, and, you know, the chip sector in particular, there's some great candidates there. Remember, I talked about, hey, here's the secrets of trading. You need great trade setups. You need to manage risk. You need to manage your trades, right? And you guys believe that? Do you believe those secrets? Right? Not so secrets that having great trade setups, great risk management, great trade management will help you in your trading? Just type in a yes. You can raise your hand, click the little raise your hand button there. All right, good. A couple people. Nobody's disagreeing with that. Right, there we go. Yeah. You know, once you sit back, it's pretty obvious, right? All right. How many of you excited about the trades we just looked at, like Procter & Gamble? There's still time to get in. Qualcomm's coming up. Some of the chip stocks, and precious metal, you know, is worth watching as too. So you excited about those trades, but you may be a little unsure how to act on that. How many feel like this dude here? It's like, whoa, Dean just gave me an awful lot of information, and I'm not sure what to do about that yet. I'll spend a few minutes going over a special offer I got. You know, it's related to what we talked about. Obviously, I said I run a service here, a stock pick service, right? But, you know, hey, finding great trades is hard. Once you find them, you need a plan, right? I've got a stock pick subscription service. We've got a great track record. I provide, you know, complete transparency for that, right? And, you know, what's something like that worth? You know, the average monthly payout for the picks would be about 1,900 bucks, given my historical run rate. You know, over 10 hours of detailed trade consultation per month in my trading room. You know, that's not cheap to go get one-on-one mentoring with a successful trader. You get a one-on-one consultation, that's not cheap, right? And I provide lots of educational materials, right? This starts to add up to a lot of money, right? In terms of, you know, the return and the training and mentoring and tools and stuff that you get, right? You go, you know, any legitimate source, it's going to be expensive, right? I'm going to offer you all of this. So great trade setups, risk management, trade consultation, live, you know, in the live markets. I'm going to offer you one-on-one consultation, ongoing education. You know, with my subscription, you get some risk management tools, some training videos, how to do options with it, all that kind of stuff, and of course the trade picks, right? And it's not going to cost you thousands of dollars. The list price on my website for this stuff is $127 a month, which is $1,500 a year for the picks. And it's good value at that price. I'm going to offer it to you for you can do a 30-day trial for 37 bucks, and after the 30-day trial, 97 a month. So that's a discount off of the list price on the website. In a 30-day trial, I'm going to put a link into the chat box here for you. All right, the 30-day trial, again, it'll renew at $97 a month after the trial. It's a discount. And you get a money-back guarantee, right? You can come try it for 30 days for 37 bucks. If it's a good fit, and it is for most people, that's awesome, right? And you can stay at 97 a month. If it's not a good fit for some reason, right, 100% money-back guarantee, right? No questions asked, no hard feelings. I just want to be fair about things, right? So that's the URL. Don't text that. That's an old thing. So I put the link in the chat box. 37 bucks. I'm still worth $1 a day to give it a shot. See if it's fit for you. Right? Here's what you get. You get the watch list of potential trades I found. I showed you a couple today. You get alerts via email, and I have an app on your phone for iPhone and Android. So you'll get a alert on your phone when I'm getting into a new trade. You get the exact details of the trade, the entry, the stop, the target. Most of the trades can be traded either with shares, just going long or short with shares, or with option contracts. And I offer my suggestion for the option contract to trade with. You get alerts when I make a change, moving, stop, taking a profit, closing the trade, same way, email, and you can opt into my phone app and get alerts that way. You get access to a live trading room Monday through Thursday, right after the market open, where they're about a half an hour. You can attend if you like. It's not required. It's recorded. There's a recap. A lot of people like to come in and ask questions, just like you did today. Hey, what do you think about this trade? You know, what are you doing over here? You know, just questions. And, you know, hey, show me that risk formula again. It's a place to do it live, ask questions. But it's not required, because you're going to get the alerts whether you show up in the trading room or not. It's just a bonus thing to come, you know, ask questions and stuff, right? We also have a chat session on Wednesday evenings for those who can't make the morning session. So it's 6 p.m. Pacific, 9 p.m. Eastern. So we have a midweek session Wednesday evenings as well. And Casey said, do I give the stops and targets in the option trade? So the trade's the trade, right? Like I showed you on Procter & Gamble, everything is determined from the underlying chart. And all my analysis starts here. And now that I got a good move, I said, okay, I want to go long on Procter & Gamble. And then so what I'll do is I'll send an alert to the traders and go, hey, we're going long on Procter & Gamble, right? The stop is this price, right? The target is this price, right? And that gives us the trade parameters. And then I say, hey, if you want to trade it with options, here's the contract. And in this case, I'm using the Procter & Gamble. I'm using the April 16th, 132 call. And so I just let the traders know. And then, but the stop is the same. If it hits that stop on the underlying chart, we go close the option contract, right? So try to keep it really simple, Casey and everybody else. Okay. So you get that weekly live chat session. You get a one-on-one consultation. When you sign up, you get a link to my calendar, and we can, you know, get acquainted, answer any questions you have, go over the website, the material, get you going. You get risk management, option trading, tools and training on the website when you subscribe. You'll get a welcome email and access to that stuff, and ongoing support and training. I'm here to help, right? But wait, there's more. There's more. I said I use Ichimoku Cloud. I have an Ichimoku Cloud course on my website, list price $247. If you take the trial today, the $37 30-day stock picks trial, I'll include the Ichimoku Cloud course, $247 value. You can keep the course even if you decide not to stick with the picks today. So that is part of today's offer. You know, I know a lot of you are new. I just want to make a really good offer to you. I'd love to have you as a customer and, you know, provide everything you need to really get up and rock in here. All right. So there we go. An offer for a trial to the stock and option picks. I went over what's included. You get the bonus of the Ichimoku Cloud training course, and there's a 30 or 100% money back guarantee on request. No hard feelings, no hassle with that, right? And you can also, you know, if you still, you know, wow, this sounds great, but I just don't know much about this guy. I understand, because there's, you know, in this market space, there's some weird people. You can go to my homepage, and first of all, you can go to the very bottom, and there's I have I'm signed up with the Better Business Bureau, got an A+ rating, and if you click on this seal, it'll take you, and there's And there's a couple dozen customer reviews, and BBB, they screen that, right? They make sure those are real reviews from real customers. And then if you really want to have some fun, go to this website, tradingschools.org. Emmett Moore, he's a hoot. And he does reviews on trading companies, and 99% of them, he just goes scorched earth, right? And just uncovers the scammers and stuff, right? He's an interesting guy. He's a colorful writer, a little bit salty, but he's written about me 3 times. And I'm one of the few sites that has a good review on Emmett's website. So you might want to check that out. It's kind of fun too. All right. That is it. I went 5 minutes over the targeted hour, but you guys had some good questions, some good symbols to look at. Casey, hey, thank you. And, if you're interested, if this seems like a good fit, love to have you sign up, give it a try as a customer. All right. Anybody else? This is the time. Quick questions. I'm going to go ahead and stop the recording so it doesn't go too long.